Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the mechanics behind automated trading systems. Today we're opening up an expert advisor for MetaTrader 5 called Swing Level FVG Confluence. This is a pure price action strategy. It uses no indicators at all, no moving averages, no oscillators, nothing. Instead, it reads raw candle geometry, fusing fair value gaps with swing support and resistance. By the end of this video, you'll understand exactly how it spots a setup, enters a continuation trade, and where it places its stop and its target. Let's dive in. So what does this expert advisor actually do? At its heart, Swing Level FVG Confluence is a continuation strategy that hunts for high-quality locations on the chart and ignores everything else. It was built with euro to US dollar and gold in mind on the 15-minute time frame, but the logic adapts to any liquid instrument because every threshold is scaled by the recent average candle range rather than fixed point values. The strategy leans on two raw footprints of price. The first is a fair value gap. This is a three-candle imbalance where one impulsive middle candle moves so fast that the wick of the first candle never overlaps the wick of the third, leaving an untraded pocket of price that the market tends to revisit. The second footprint is swing support and resistance. These are horizontal levels harvested from confirmed fractal pivots, a high or a low that stands above or below a set number of bars on both sides. On their own, each of these signals fires far too often to be useful. The edge here is the confluence. The expert advisor only acts when a fresh gap is sitting right on top of a structural level, a bullish gap launched off swing support, or a bearish gap dropped off swing resistance. A lone gap, or a lone level, is simply ignored. Who is this kind of system suited for? It's really an educational study for traders who want to understand structure-based, momentum continuation logic, the idea of buying demand stacked on a floor, or selling supply stacked on a ceiling, and then riding toward the next real level. It's methodical and selective rather than high frequency. Remember, everything we cover here is for educational purposes only, and nothing in this video is financial advice or any kind of promise about results. We're here to learn how the code thinks. Let's walk through the exact logic, step by step. The expert advisor only evaluates once per freshly closed bar, so it never reacts to a flickering, still-forming candle. On each closed bar, it first measures a volatility scale by averaging the candle range over the look-back window. This single number adapts every threshold to the current symbol and conditions. Next, the strategy harvests its levels. It scans back through the look-back window for confirmed fractal swing pivots. A bar becomes a swing high, our resistance, if its high tops every neighboring bar within the pivot leg on both sides, and a swing low, our support, if its low undercuts them. Because it only uses closed bars, these levels do not repaint. Now the EA searches for a fresh, level-backed gap. For a long, it detects a bullish gap where the older candle's high sits below the newer candle's low, with a strong bullish impulse in the middle. The gap must be taller than the minimum gap factor, so tiny noise gaps are rejected. Then it checks confluence. A swing support level must sit right in the base region of that gap. Finally, it confirms freshness. No earlier candle may have already dipped in and tapped it, because we want the very first touch. With a valid setup in place, the strategy waits for the just closed candle to retrace and tap the gap, and crucially, to close back above the gap base. That close proves the level held. When both the tap and the hold are confirmed, the EA signals a buy at the ask. The stop loss is placed just below the lower of the gap base or the signal candle's low, padded by a small buffer. The take profit is a genuine structural target, the nearest swing resistance above the entry. If there's no such level, or if the reward-to-risk ratio falls short of the minimum, the trade is skipped entirely. The short side is a perfect mirror. A bearish gap dropped off swing resistance, tapped on a rally, holding below the base, with the stop above and the target at the next swing support below. One position at a time, the spread filter guards entries, and the structural stop and target manage the exit. Let's read through the MQL5 you see on screen, just as you would inside MetaEditor. At the top are the input parameters that shape everything. Lots is your order volume. PivotLeg sets how many bars must sit on each side of a pivot to confirm a swing. Raise it, and you get fewer but more significant levels. Senior loopback is how far back the EA scans for both levels and its volatility scale. MinGapFactor is the smallest gap it will accept, expressed as a fraction of the mean candle range, so larger values filter out noise. ConfluenceFrac defines how close a swing level must sit to the gap base to count as backing. Zone expiry caps how old an unfilled gap can be. Stop buffer frac pads the stop, and MinRewardRisk rejects any setup whose structural target is too close relative to its risk. Now the signal itself. The first condition checks that the older candle's high is below the newer candle's low and that the middle candle closed above its open. That's an upward imbalance driven by a bullish impulse. The gap base is the older high, the near edge is the newer low. The EA then requires three things together. The gap is tall enough, a swing support sits in its base region through has support confluence, and the gap is still fresh. Next it reads the trigger candle. Tapped is true when that candle reached into the gap, and held is true when it closed back above the base. Only when both are true does it act. The stop loss goes just below the base or the candle low. The take profit is fetched from nearest resistance above. The reward to risk filter runs, and finally trade.buy sends the long order. Let's watch this play out on the chart, following both a long and a short in sequence. On the left, price drifts down and carves a swing low near 1.0840. That becomes our swing support, the green dashed line. Then a sharp, bullish candle fires upward, leaving a fair value gap shaded in green between 1.0850 and 1.0858. Notice how the base of that gap sits right on top of the support level. That is the confluence the strategy demands. Price pulls back, and the sixth candle dips into the gap and closes back above its base. The level held, so the buy entry triggers. From there, price climbs steadily, candle by candle, until it reaches the swing resistance line near 1.0895, where our take profit is hit and the long is closed. Now watch the mirror image unfold. That same swing high, around 1.0896, stands as resistance. Price rolls over and a strong bearish candle drops away, leaving a fair value gap shaded in red just beneath the resistance, between 1.0884 and 1.0888. Price then rallies back up, taps into that red gap, and the trigger candle closes back below its base. Supply held the ceiling. The sell entry fires. Price falls away, sliding down through the structure until it reaches the lower swing support, near 1.0853, where the short take profit completes the trade. Both trades anchored entry and exit to real structure. This is an illustration for educational purposes only. And that brings us to the end of our walkthrough of Swing Level FVG Confluence. We covered how this pure price action expert advisor fuses fair value gaps with swing support and resistance, why it only trades the confluence of the two, and how it enters on the first retrace tap before targeting the next structural level. We also read through the core MQL5 inputs and signal logic, and we visualized a long and a short setup on the chart. Remember, everything here is educational content only, and nothing in this video is financial advice. If you found this useful, please hit the like button, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment with the strategy you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.